The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and The Tech Insider, David White.
And it is a gorgeous but cool day at the headquarters of Technical Trading and Investing. A beautiful March 27th as we kind of edge out of what normally is our winter ends up in the end of February. We're having kind of an extended winter time down here in Clearwater. Nice and cool, and what can you say? I wanted it just a little bit warmer, but what can you say? Anyway, we've got a market that was strongly off 11, 12 points on the S&P cash early in the session. We're back off about 1.5 now. 1.9 billion shares yesterday. We came in with started the show with just about 2 billion shares, so even lighter a volume than yesterday. What does that tell us? We're going into a 3-day weekend. No one wants to buy. No one wants to sell. What you don't like to see is going into a 3-day weekend and pushing higher on extremely light volume. And I don't think we'll probably have much. The other thing that we have is the end of quarter. A lot of quarterly results are being pushed out on Friday's close, and it's not uncommon to see Friday on one of these quarters pull back 5 S&P points. I suspect that's what we're going to get tomorrow, is just a little bit of pullback as everybody cooks the books as much as they can to make their quarterly results look good. But we've got absolutely no volume at this top. 1.9 billion shares is just incredibly low. We see every pullback faced with a little bit of buying and zero selling, and that's basically what we have. A very low market that continues to move up higher. It is pushing away the fundamentals because it doesn't really matter if the stocks and the companies that have the stocks earnings are actually increasing any. For most part, they aren't. It's all about the Fed pushing money into a stock market that's up high and creating a bubble. That bubble will eventually burst, and normally you see it on very, very light volume like we've got the last couple of days, and even before as we've come up here and pushed this previous high. I suspect there isn't a lot back in the, in the bag left. Of course, we're going to have 3 days of a weekend, and a lot of times shorts will get out of the way as they get to the weekend. We've got some new information on some stocks that is interesting. First, a downgrade on Cliffs Naturals, CLF. And if we look at this, down pretty succinctly. I always liked Jim Grant from Grant's Interest Rate Observer. He always said copper is the only metal that comes with a PhD in economics. It already knows what's going on. He says similar things about other commodities. What we have is Cliff Natural. They are both reporting and getting downgraded on huge supplies of iron ore. That they're in the middle of the United States makes it a little harder for them to easily export. But at the same time, the U.S. Forecast for uses of steel is way down, mostly on the sequester deal, where there won't be a lot of these boondoggle projects like the Big Dig up there that take forever and started off at $5 billion, ended up being $150 billion or whatever it was up there. It was something ludicrous. Take 20 years and thousands of lives. But none of those are really moving out, and no one's buying a lot of steel, and the supply is gaining. We're seeing the same thing in copper, but kind of the realization here in the underlying company that is a big iron ore company. You can always give me a call. It is going to be probably quiet the next couple of days. 877-927-6648, 877-927-6648. Like I said, we're off a 1.5, 1.9 billion shares as we start the show. Just not a lot happening other than that. We had a pullback on the Cyprus event tomorrow morning. About there's 7 or 6.5 hours. 6.5 hours ahead of us. So by the time the market opens up, we'll already see how well their plan for reopening the banks comes along. My guess is that they will not get the banks open before we start trading, and we might see a little weakness in the markets on that. You will not be able to take money out of the country. You will not be able to get more than 300 euros. You will not be able to pass go without going to jail first. And a lot of those people in Cyprus probably not going to be too happy. Now, the funny thing is Cyprus is about 1 million people. So a lot of times people, you're making a mole out of a hill out of a molehill, or actually a mountain out of a molehill, right? You got to know your molehills. I really don't know too much about moles. In fact, I got moles in my yard. If anybody knows how to actually kill the bastards, let me know. But you can call in. But short of, I think, taking a gun and shooting them underneath the ground at night, these little buggers they have been in my yard before, but they're in the neighbor's yard. They'll have to cross the street, and they will eventually do that. But his yard looks like someone's been furrowing it underneath under the ground. You can just see the lines running across it. It looks like a cartoon, like they always show the rabbit or the mole or the muskrat or whatever digging underground, and it's like it leaves a trail. Of course, you don't see them actually do that, but in the morning you come in and you see like 4 of them have been like grazing through the tender shoots of my grass. And what can you say? Anyway, you can call me with my tips for killing moles at 877-927-6648. Other stocks that are probably of interest have been the financials. Of course, when we look at some of these, the weakest sector over the last few days, mostly based on the idea that there's going to be at least some kind of contagion with this market. It did briefly, if we look at Bank of America, it did briefly break out. It did have higher volume, and it instantly, 4 or 5 days, is back into the trading range. It was a little lower this morning on lighter volume, but desperately back into that trading range. And we're going to continue, I think, to see a lot of those financials pull back on the event, which isn't much now, but will be more. Other things of interest, we saw a new short-term high in natural gas at 408. I didn't see if it went up any higher today. Let's see if I can actually pull this up. There it is. What do we get? It's pulled back. It was up, well, maybe that's not even correct. It shows 397. I thought it got to 408. Maybe it did reverse today. We'll find out later. Maybe someone in the den has an accurate quote. It spiked, and of course, anytime you get the kind of what do I want to say on this? You get the kind of extended winter. Most of these electrical companies will make contracts for natural gas and coal based on averages for winter, and we get one that runs a little long like we did this year, and actually even a little bit more brutal. They'll run out, and then they have to pay spot prices, and pretty much what we're seeing in natural gas. I suspect we're probably going to see a pullback over the summer to somewhere around $3.50, and I suspect probably mid to late summer, July or August, I'll be looking at maybe finding that we're ready for that next really big run in natural gas that would really move the needle out here. We had kind of some small profits off of it in the last year, but I think that there's a huge run in this thing, and probably going to use UNG to play it. Bank of America, of course, was off. We're having other issues. Italy's bond sales did not go well today. Of course, this, I think, is the last week where we're going to see European stock markets close at 12:30 Eastern Time. They'll be closing again next week at 11:30 Eastern Time, and I suspect that's probably also going to give us a little bit more time where the market is not held perpendicularly until that market closes. So I think that's some of what we have is the last 2 or 3 weeks of that time change between the market close in the United States and Europe, and we'll see that come back together on Monday. Other things of interest, in fact, I needed to go back and look at this. I didn't even get to what this day in 1998. I normally do my little history thing at the start of the show, but I forgot about it. On this day in 1998, the Food and Drug Administration approves the use of the drug Viagra, an oral medication that treats impotency. Of course, now we all know from the television ads it's ED. And the other things kind of interesting is that it really, I think this is the first drug that really spawned television advertising of prescription drugs. Remember, these ads hit hot and heavy. We know that you don't, if you have something more than 4 hours, you got to call a doctor. The comedians would love to pay for this drug, just if it would keep on, because it keeps on giving. There's always a lot of jokes around this stuff. It was patented in 1996. Mere 2 years later, a incredibly short time, made it to the market and passed FDA regulations, and has been a huge winner for that company. Getting kind of into the end of its lifetime under patents. And probably seeing the updates of it here in the next few years. And also, I didn't know I was supposed to have an honest conversation with my doctor. I thought I was supposed to go in there and lie. But every one of these ads all say the same thing now. You need to go in. I needed to go in and have an honest conversation with my doctor, opposed to just lying to him. You know, I'm a black blues singer that's 85 years old. Maybe that's what I should tell him. Who knows? But anyway, we continue looking at a market out here, watching very closely how this works. But another push-up, this is pretty much where we get that 1562 or so, and people start selling or taking money, 1563 on the S&P cash. But you know, we've gone through this first segment with about a minute left, and we still have not hit 2 billion shares on the consolidated New York Stock Exchange tape. So we'll continue watching that. Oh, UNG, just so we look at the chart. I wanted to look and see what kind of volumes this had. It basically shot right up and hit the gap, which is what I wanted to talk about. I'm kind of bouncing all around today because I forgot to bring my notes up here from the car. They're locked down in there. Anyway, UNG came up. It's filled this gap. That gap happened on November 26th. Gap down fairly hard on kind of an early light winter. This thing did make a nice little bottom down here. Would have liked to seen it actually test that low of January 9th at 1738. Didn't quite do it, but it did get into that candle with lighter volume. It's been moving up. Give me a ring. Let me know how to cure those moles. 877-927-6648.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
And just thumbing through the news here and seeing if there is anything exciting. Still under 2 billion shares on the consolidated New York Stock Exchange as we talk at 2:24 Eastern Time. 1561 on the S&P cash, still down 2 points, but pretty much all the buying today on very, very light volume. So we'll have to actually see how this works out. Did have a gold move up nicely, but I suspect that part of that is that we are going into a long weekend, and normally you find a little bit of strength out here. Gold at 1606 on the contract. What do we have here for the actual closes? The COMEX gold prices rose 11.20 and closed at 1606.60 an ounce. Silver fell 4 cents to $28.62. May copper remained unchanged at $3.44. So not a lot happening in there. We're looking at some of the other stuff. Of course, we saw most of the markets in Europe close lower. UK's FTSE down 0.2%. Germany's DAX was off 1.5%. France, CAC off 1%. Spain, IBEX off 1%. Portugal, PSI off 1.8%. Italy's MBI, or I want to say MBI, but it didn't. It's MIB, just like Men in Black. Italy's MIB off almost 1%. Irish index is off 0.3%, and Greece's ASE general index is off 4%. And a lot of that was on, I think, after the was it off after the close in Italy? A lot of it just on the weak bond sales of Europe started pushing Greece down. Also suspecting that now that they've allowed separate, basically Cyprus to confiscate all the money, that Greece will probably be next if they want to stay in the EU. Let's see if we had anything. We've been talking about over the last few days, BBRY, about Research in Motion. Research in Motion, they have a little bit of a bounce today. Earnings are tomorrow morning, so we'll see what happens in this. One of the interesting things is that from a year ago to today, short interest is up 50%. It is up 6% in the last few days from Bloomberg, which only company that I know that really kind of keeps an eye on short interest in the market on a daily basis. They do it by estimates and watching customer order flow. So it is an estimate. It's not actually the report that comes out at the every 2 weeks. But what can you say? Up a little bit. I suspect that what we're going to find out tomorrow is Verizon's going to talk about a little bit about the sales of their new product. And it's going to be pretty much a sell on the news, much like the Lumina product from who was that? Nokia. Just a lot of fanfare, a lot of hoopla, and then just wasn't much in there. It's kind of like those burgers you get for $1. You look at the picture, the thing looks like a Big Mac. You actually get it out there, and it looks a little wimpy. And maybe more like a slider than an actual hamburger, doesn't it? And not so much horse on it, or in it. But a little pop-up here, very light volume, of course, earnings in the morning. A lot of people are thinking that they can get and start a short squeeze in this thing tomorrow. If you're looking to make any money tomorrow, that's probably going to be one of the few stocks I think that we have a significant move in. And I suspect at the end of it all, probably going to have some significant trading range in this thing. If it does start moving and you get a short squeeze, might be a good one where you can make $1 or $2 out of this thing in an hour or so, because I suspect this thing's going to move extremely fast. I would not be on the short side of this thing because of the massive short interest on this thing, which is approaching half of all the shortable shares out there. One of the favorite tricks is, especially on this, is to move your shares out of the available float a day or two before earnings, so that everybody gets their shares called back at the same time that you come out with some earnings. They have cut their costs significantly. It does not change anything. I suspect that we will see a very, very low, how can I say this, a very... I'll think of it here in a minute. Anyway, I'm having a senior day, I think is what they call it. Give me a ring, 877-927-6648, 877-927-6648. We come back, we're going to talk about Apple. We were talking about that a little bit yesterday. Looked like this thing had pretty much peaked out, and I suspect that options were telling us just about the absolute truth on this. But we'll talk about that a little bit when we come back.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91. And only 2 trading days later, after a huge jump in the market, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
And as we come back, we're going to get to a few things. First of all, we were talking about Apple a few days ago. Options pointed that there was a rather large bet that Apple would not go over $470. Temporarily, it looks fairly decent. Got within a nickel of it 3 days ago, $469.95. We're now pulling back. And again, on light volume, I suspect we're probably going to need a little bit more consolidation. If this could get back down to about 435 on light volume, I think that would be the first sign we might be ready for some kind of continued bottom. But this thing has moved off $700, so don't be surprised if this takes a little while before it gets any kind of sea legs underneath it. But not real surprised that it's pulling back here to this 450 level. People taking a little bit of profit that had just bought it lately and probably trimming the sales a bit on it to make their quarterly numbers look a little bit better. So some of this, I suspect, is organic other than real buying and selling based on any kind of long-term price prognostication by the big fund managers. So what else did we have? Apple is off fairly strong today. So was Google. When we look at Google, this thing basically had pretty much made a top, and it's starting to come back into what is the last day that it had high volume and a big price spread. The low of that day was, is that right? Yeah. close. What was the low a day on that? Low a day. 805, and we're kind of into that today. Let's see what we have for Google's current price quote. Just underneath that right now. Is that right? 1.7. Yeah, 1.76 million shares so far. 803.83. So we're kind of underneath that close. We're back into that support line, and that support line will take you back into probably 792, 7091 in that area. But you've got 4 or 5 days before this thing did break out. It did have a little stronger volume out here, 2.7 million shares. So today is so far a pullback on a lighter volume, and some of these things will probably come back to this area if it is going to make some kind of ABC up out of this. Not much of a pullback so far, but I'm kind of saying that a lot of these stocks have probably hit highs for a while. Another one that continues to move well is Seagate. This one is back into its gap. We've been talking about this one for a while. I've been kind of waiting to see whether or not it would be a setup for a short candidate, and it could be here for a while. But I suspect that the margins will be moving down in this sector fairly soon. WDC is Western Digital, same kind of thing. A lot of these are banging around at these highs. You have one real good sign out here, and I think that we could see these things pull significantly back. And by significantly, I suspect the next move down on a lot of these is probably going to be around 20%. I've not been a fan of holding any of the Chinese companies, mostly because they won't tell the truth about what they have for financial reasons, and I still haven't heard how that's been settled between the Chinese and the United States government. But companies like Baidu do not have to give the same financial accounting as a company here in the United States, and that always worries me. This thing's bounced a little bit on a very, very light volume. Basically we're probably going to close on Baidu back into this trading range. On the chart, not a bad looking chart. 85.96, which was the December 6th low with 8.1 million shares. You really haven't had anything come close to that. 8 million shares. Kind of broke that low on, what is that, the 20th of February. And you had kind of a small little move back down here, but a close back above, what would that be, the high? What's the close now? $88 would be a close back into that trading range. So if you are a big fan of Baidu, which I am not, this is probably the first buy signal that you've had on the stock, and with the volume low the last 3 or 4 days, not too bad. But I think Apple and Google probably weaker. If you wanted to look at one, it would be Baidu of these big web page style companies. LEDS. I know everybody's been wanting to go after this one for a while. It has taken off with significant volume, doing a little bit of a retracement back here. I think someone called in about this one. Some LEDs, but we were talking about maybe 110 on this, and I suspect you might get that. This is the start of a decent pullback, but probably be watching. I'd love it to, especially these dollar stocks, to have this thing pierce that 110 area yet again, where the volume started picking up. But one of the other ones out here. I did have a question in the den yesterday, and of course you can either email me the questions at path@tfnn.com, and if I get them before probably about noon or 12:30 before I leave, I can go through them and see if I can answer them on the show. One of the ones we had in the den yesterday was about Bitcoin. Most people probably haven't heard about Bitcoin. It is a artificial monetary instrument like a dollar. It's a fiat currency, just like everything else. It is on the kind of a currency for the web. And I guess the question was what I thought about it. And to tell you the truth, not much. I know there's been some occasional fraud in the way that it's been set up. The thing that really bothers me about it is that it is fairly easy to use it for money laundering, and the government, U.S. government especially, European governments are all over this as a money laundering scheme, and continue to go after it. And I would not be surprised to see this thing attacked almost like the gambling sites were attacked a few years ago and put out of business and tried to be put in jail, mostly on the laundering of money issue, not so much on the legalities of actually being a illegal business or not. But what can you say? Anyway, it is a kind of an artificial currency. For people who don't know it, even like countries like Switzerland, normally you think of them having the Swiss currency and that's it. They've had parallel currencies, and there are parallel currencies in places like Switzerland. They have a thing called the Weir, and because the government sometimes got out of whack of doing stuff, if you're in business, there's a thing called the Weir, which is like money or scrip that you can pass between businesses that actually take the Weir. They've been using this probably since the 1920s or 30s or something, and they've been able to keep their country moving along, because when you could not borrow the Swiss franc from the traditional bankers, you could always try to get together a bunch of other folks in the business to lend you some weirs, and most, about 80% of businesses will actually take weirs in trade. So if you need to buy product to actually sell something, you can always exchange it for that. They've always been able to get loans when other parts of the world have not been. That was kind of the idea behind Bitcoin, and also the ability to have micro transactions, that is, transactions of a half or a tenth of a cent, without a lot of friction that you would find in traditional currencies. So we continue to see that. We've got people, I feel like a fish in a fishbowl here today. Not only is Steve wearing a silly golf hat today, we've got the book types coming in here and giving a tour. So we'll see how that works out. Anyway, I'm going to go back just to the S&P here for a second and see if we got any volume movement. What do we got? 1562, 2.1 billion shares. We came in with 3.1 billion shares yesterday, and we are behind that significantly. So looking for a very low volume close here by the end of the day, and just off 1 point on the S&P cash. So we'll see if anything else moves along. Wanted to take a look at Amazon. Amazon, of course, they came in and started pushing the stock very early. AMZN still has a huge amount of support from the what would you say, the industrial, not the industrial, the fund managers, let me put it that way. And not a lot of news on this thing, but I suspect a short squeeze. This thing has made a fairly significant high on light volume. It had a blow-off top back on the 30th of January. It's been meandering slower out here. Again, this stock has one of the highest PEs for a major stock in the stock market. In fact, it is probably the only stock that you're going to find out here in this $200 or above range that has, depending on which numbers you want to use, 160 to 500 to 1 for the PE. So as we look at this, it is one of those issues about the perception, sell the steak, not the actual, or sell the sizzle, not the steak. Anyway, we do have a phone call, so we're going to look at Max from Houston. How you doing today, Max?
I'm doing just fine, thank you, David. And I know what you're going to say about Intel, but I'm getting kind of itchy because I think it's topped out. And
they have lotions and ointments for that. That'll get that. That'll take that down. A little baby powder, maybe a cheap thing. the news is, we're not looking for a huge pullback in this thing. We're looking for $19 in it, and I think you can easily get it. It's just bouncing around in here. I wouldn't get too fired up just yet on this thing. It's probably going to, I think, if you catch this right, you're going to have this thing probably over the next 6 months go to $30. But I think you need to wait until it's back in that $19 range. You've got a high volume low down there. It's been untested. You need to get that tested. And especially if you're looking for the kind of moves on Intel that are 10, 15, 20 cents a day. They're not huge moves, so you got to get this thing right. You're not going to, you're just going to get bored out of it if you don't. And so you already knew what I was going to say, huh? Was that was I going to recommend ointments and lotions?
No, I thought you were going to say that I need to look for stocks that are not so widely owned by institutions. And
if you wanted to hold this one for a long time, not a bad one. It's just pretty much out of favor. It's in this larger trading range, and I think you just need to wait for it. And could over 6 months, could the thing go from 19 to $29? And I think come into the second quarter, this thing's going to find itself. We talk about Arms Holding. I suspect that they are going to go after these guys in a hurry. But Arms Holding been pretty much selling off kind of the last few days, a little bounce out of here with the rest of the market, but on very light volume. And I think until they get a new CEO announced and really get the transition over, even just the rollover from normally changing a CEO, because the new CEO is going to go through the books, find everything he can, and throw it in with the kitchen sink on the first quarter. And everybody always knows it, because that's what, that you want to get everything out of the way. Any kind of bad news, any kind of accounting irregularities done in the first quarter of your CEO-dom. I think what you're going to find is as this pulls back and more people get out of this one, you're probably going to see that money going into Intel. And I think you've got pretty much the start of that good one. But I think the whole market, I don't buy when the volume is vapor. And I've just seen too many times. And now everybody's going to say, well, you're just calling Wolf, the boy that called Wolf. The problem is that you want to make sure that you've got your risk-reward set up correctly. And the idea is that it's always a revolver and you're playing Russian roulette. The question is, do you have 5 cylinders? Do you have 100 or 200 cylinders? And when volume's low, I just know the chances of a huge move in the market, especially down when you're hitting highs like this on very light volume. Now, is that going to happen the next day or so? I don't think so. I think we could walk in Monday and find some massive selling, though. Yeah,
I think so, too. I think it's next week or so. But
anyway. I think you're going to probably see it start a little bit tomorrow. You got one or two options. The Cyprus opens up, and they don't have enough police to handle the lines and people yelling and screaming, and you're going to see a little bit of that on TV. Or the banks don't open up at all, which may even be worse. So, I think you go through that tomorrow. We probably pull back just a little bit. And then on Monday, with a quarter over, we're probably going to see a lot of fund rebalancing. And I think we're probably going to see a huge increase in volatility then. So, probably looking at, especially if you're an intraday trader, I think you probably want to be well and rested and ready for Monday.
Yeah.
So I'm not going to get too excited about buying here. The reason why is there's a bigger pattern on Intel, and that is an asymmetrical triangle, and that's what you have. You have higher lows and lower highs, and even though this thing's pulling back up to this gap, there's nothing in here that says a lot of volume is going to push through those highs. So just be patient.
I sure will. Thank you.
Thanks for the call.
Bye-bye.
Be back in just a second. Hopefully he'll be able to tell me about moles.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of tfnn.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
And as we come back, we've got a call, and it's Rob from Mount Vernon, New York. How you doing today, Rob?
I'm fine, thank you. Thanks for taking my call. I'm interested. I've been following the shippers, NM, NMM, EXM, and so forth, and also EGO Gold.
Mm-hmm.
I was just concerned about what's going on over in the Euro area, seeing that they're based in that area. They're I don't know if you might have
which one? EGO, Eldorado Gold.
Yeah, EGO is Eldorado, I think. Yeah.
Yeah, but they're not. You're talking about NM, based in Europe.
Yeah, I think they're in Greece.
Okay.
Corporate offices in Greece, and I was just feeling that maybe that when governments see money, they sort of rotate towards it.
Yeah. So you're wondering whether or not this would be a problem with maybe Greece doing the same thing that Cyprus did?
Yes, many of the shippers sort of have a base in Greece, and
Yeah, because it's a big tax haven, and you can multiply fly flags for multiple ships under one name, and yeah, it's a haven for a lot of criminal activity, or at least it would be criminal activity in any other country. But that's why a lot of there's a lot of sneaky business about the way ships are registered, and it happens in Greece. But it doesn't really look like there's a lot. I mean, you've got kind of a top in this thing already. Do you hold it right now?
No, I'm just sort of watching NMM and NM and EXM.
Yeah, I just don't, to tell you the truth, I just don't see a lot in NM. Of course, you're not going to short a $4.50 stock. So the only thing would be going long this thing. It looks like it's going to base out here for a while. I don't see a lot in this thing that really makes me want to go trade it either way. EGO, much different. Now here's the issue which we're probably going to see resolved over the next few days. That is that a lot of these stocks have been sold. They've been sold for a reason. That is, a lot of these funds bought them. Profits are going down. The exits are extremely narrow, along with gold. Now, what happens if we start seeing some real displacement in Europe? What are they going to do? They're going to go and start selling the thing that they have the easiest time of selling, and that's going to be gold. So, we've seen, what was it, the dollar-euro hit a, 4-month low today? As that continues to move down, we're probably going to see more and more liquidation of gold in that. Right now, people are starting to buy it as a hedge. I think that's what you saw in the action today. The question is, do you see a ton of people coming in and blowing out the only thing that they have that they can sell? A lot of these countries, like Greece and the other European countries, have been amassing a lot of gold for this reason alone. That is, on the first little gale out here, they're going to start dumping it to raise money to do other things with. So, I think you're probably going to know in the next couple of days, probably Tuesday or Wednesday. But this is the kind of chart I like to buy, except that you had a high volume low. You need to see $9.22 tested. I don't think you really got that, did you?
I'm looking at it right now. I see you now. Okay.
Yeah, you want to see 922 pierce on lighter volume and then pull back out. This is the kind of chart I like. And, maybe this is a bottom for gold. I think this chart looks 10 times better than the NM one. And if I was going to go long today and you put a gun to my head, this is the one I'd pick. But I think you probably have Monday or Tuesday. You're going to see how this Eurozone thing plays out with Cyprus. If it doesn't cause a run on the banks, things calm down. You might see this one might be a good play. So I'd be watching this one closely. I want to thank you for the call, Rob. See you all tomorrow. Same bat channel, same bat time.